Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, July the 11th. My name's Eric Wilkinson. Yeah, you might recognize me as the Wolfman from mainstream media, but I'm here to teach you guys some different option strategies you can implement into your portfolios. And please remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. We've got some preliminary CPI numbers coming out of Germany and France in line with expectations, so really not a whole lot to discern from that. It's also not one of the main economic data points that we're looking at from Great Britain. CPI is, but not in this CPI reading, okay? We're looking for the flash on those. And then we move back over here to the United States, and we got consumer price index of our own coming in at 0.1%, which is slightly higher than the expected, unchanged. And then core CPI, which strips out food and energy because it's a more volatile aspect of that number, just to get a kind of a reading of the broader consumer price index. Because when oil spikes and stuff like that, we want to kind of discount some of that out from the consumer price index because it's not a constant. It may dip back down into the lower 50s, right? Even with a good economy, we could see oil dip, and that could cause prices to come off and make that volatile in and of itself, right? So that, when we strip that out, gives us a little bit more of an interesting reading. And it came in at 0.3%, in line with expectations, slightly higher at 0.2%. One thing to pull away from all of these CPI numbers is the tariffs aren't really affecting CPI. We're not seeing a massive spike in consumer price index, right? So that is a good thing. I wasn't expecting that. I was expecting CPI to really start to pump up with these tariffs, because that causes prices to move higher, right? Well, we're not really seeing that affect us so much in this reading. The other thing to note is that the economy across the board is looking pretty good. One other thing I was going to talk about is we've got Powell testifying today. As of right now, as a matter of fact, he's been talking for probably an hour. One thing I did notice him talk about was that the tariffs were causing corporate sentiment to come off a little bit. Well, we talked about this on Tuesday. We had the NFIB, which is the National Federation of Independent Businesses. It's a small business index that gives a gauge as to how they see the economy is in and around their environment. So that's important, because we talk about velocity of money, and these small businesses are really the linchpin of the entire economy, at least here in the United States. So they are a major factor in how this economy is going to shape up. With that being said, since 2017-ish, we've had a reading on this NFIB above 100. Now, remember, since Obama and the entire economic disaster of 2008, 2009, we haven't had that sentiment above 100. Well, last couple of years we have. Now I'm seeing Powell talk about how this inflationary, or these tariffs are really causing a drain on that. It's not showing up in the data. So I don't know where he's coming up with that, but that was one of his reasons for possibly lowering interest rates. I don't think that they necessarily need it, especially if they're only going to do it by 25 basis points. That's not going to really do a whole lot anyway, except for a psychological thing to the consumer saying that it might be a good thing. So just keep that in mind. We've got bonds coming off, despite the fact that he is talking about interest rates and stuff like that. So it's a little bit bizarre. And finally, we got natural gas storages coming in at 81 billion cubic feet, expected to be 71 billion cubic feet, so a slight expansion in inventories there. All right, let's get on with the overall markets. We got crude oil moving higher again today by about 20 cents. We're back in that 60 handle. Not really where I want to be for the overall economy, but it seems like we're seeing this demand for crude oil. We're seeing those inventories really drop. We've gotten a couple of readings, so there is some demand out there, which is going to drive it. So I'm a little bit weary of us being able to get back down there into the lower 50s, especially with some of the demand we're seeing here in gasoline and distillates across the board. So that might be out of the realm. I'd like to see it just for the economy's sake. So, all right, we've got gold coming up off of its highs, still in positive territory. We got a big spike overnight, and we have seen nothing but bearishness out of that since then. My GDXJ isn't the best position right now. I need about 1.5 points to come off in the next 8 days or so. So a week I have for it to come off, and at least test this Fibonacci is what I'd like to see for that trade, but I don't know if I'm going to be able to have that come into fruition. All right, bonds off by 0.5 point despite the fact that we've got Powell talking about rate cuts. Well, now the market's saying, hey, we probably really aren't looking for that rate cut so much anymore because the economic data is coming out. The equities are making highs. As a matter of fact, the Dow made a new all-time high, 27,000. So the markets are doing well. Why would we cut interest rates at a time like this? Yes, they've done that in the past, and they've talked about it. Yes, they have done that in the past when the markets were at all-time highs. But why create more frothiness? Why create another bubble? We are doing just fine as we are. Leave rates unchanged. Yes, you probably overdid it, and now you're realizing that. The Fed always overdoes it, you guys. Whether it's to the downside or the upside, they always end up going too far. So, and have to backtrack a little bit. That's just something that is a product of being a part of the Fed and not really knowing what's going on. Just like Powell talking about how businesses are being affected by these tariffs and it's really causing a drain on their overall perspective. Well, we're not seeing that in the NFIB. We're not seeing that show up in consumer price index or anything else. It seems like the economy is doing okay. We're not seeing any frothiness. That's a good thing. We've been creating bubbles and bursts all the time. Why wouldn't we just kind of relax a little bit and try this out? But who's to say? Anyway, the VIX coming off out of those teens, which isn't really what we wanted to see. Here's what we were talking about with the Dow Jones Industrial Average above that psychological level of 27,000. It is historical. Market's never seen that. Sorry, I don't know why I'm trying to pull up a screenshot there. I want to actually pull up my little pin thing here. But here we go. We got that move. We tested it a couple of times in the past, and it was breaking through. It's more of a psychological level. That's lining up with 27,000. Get your 27,000 hat on. Let's see if I can do a little hat real quick. There we go. There's your crummy little hat. I've got my Dow 27,000 hat out there for you. So pull those things out and celebrate. It is just a number, but breaking that chart pattern I was talking about that was looking a little bit toppy, where we got the shooting star, like when we took out the overnight session in the NASDAQ, but today we're getting that peel higher. We've got another all-time high in the NASDAQ. It isn't the overnight high, so it is a day session high, which is what we want to see. We want the highs to be printed in the day session so that it isn't a target, especially if we think that the market's going to come back over. But something to say here also, we are consistently seeing higher highs and higher lows, which is a trending bullish market here. So I was thinking we were going to kind of top out, roll over. It's not looking like that right now. So I am going to be having a quick trigger finger on anything that I have in the markets right now. But I'm not getting hurt too bad today. Things are working out quite nicely. So Dow Jones, NASDAQ, E-mini S&Ps have all printed these highs in the day session. So anything can go right now. Remember, we were talking about that. Those are going to be targets that the market's just going to have eyeballed. Well, now that might be the time where we start seeing that rollover. I was a little bit early to it, thinking that we were overdone to the upside. But, the market has always got to push a little bit further than most people expect. And that's, I think, what's happening here. All right. E-mini S&Ps on the 30-minute chart. Each candle is a 30-minute. Each section here is full day. I'll highlight the overnight session so you can see the day session is the darker, the overnight is the lighter, and we can see that overnight inventory was pretty much flat, maybe got a little bit short coming into the opening of the day session, but we're flushing those guys out and we're right back to unchanged at the for the most part. Still above 3,000, but the market doesn't seem to have a whole lot of oomph to get moving higher right now. It just feels like we're kind of trudging in and around and banging our heads up against the ceiling, kind of. All right, and I haven't added anything. The only thing I'm looking to do is cover my Qualcomm here. We're very close Market was a little bit better earlier today, but I'm going to be looking to cover this because you can see I put this trade on. It really went against me almost the entire time. I was playing out the probabilities. Matter of fact, I put this trade on right after one of our webinars, and somebody was saying, hey, you know, aren't you worried about that gap getting covered? And I was like, yeah, I thought that this part of the gap might get covered, and then we start rolling over. Well, we covered all the gaps on the upside, which was a little painful. I'm very close to, I'm actually in profit right now, but not where I'd like to be. That being said, a little bit of a further move lower would be great for my position. As a matter of fact, close to the end of the day yesterday, I was trying to get out of this thing for about 50% of my max profit. It came up a couple of pennies short. Today, kicking myself a little bit. You know, did I want the penny or the trade? Well, I wanted the trade, not the penny. Today, I want the penny and the trade. Or I want to give away that penny, I should say, to get that trade. But I'm very close still yet. I'm a little bit off the market. The low was like 26, and I'm trying to get out for like 23 cents or something. So again, very close. Didn't give up that edge, but I'm gonna ride it out a little bit longer here. And that's all I've got for you guys. So I've got a couple working orders there, and that's about it. Other than that, I don't have a whole lot for you. Today's going to be a great webinar on the iron butterfly, though, you guys. That's going to be a great one. Or sorry, the iron condor, because when we don't have a market assumption and we want to take advantage of something like that with high implied volatility, well, that leads us down the road to something like the iron butterfly. So that's how I'm setting up this webinar. We come up with a market directional assumption, which we do on a daily basis, right? With Qualcomm, might be bullish, or I might be market neutral, thinking it's going to settle down in and around this area. Well, once you come up with your assumption for your particular underlying, I'm going to show you how to find the right strategy for that assumption. So check it out at Pro Trader Strategies. We're doing it a little bit different than most people. I'm not just teaching you a strategy, and the best place to put it, I'm showing you what we do on a daily basis and then how to go forward with that information. All right, so check it out at protraderstrategies.com. Oh, and one last thing, give us a like on Facebook so that you get quick access to these videos once we pop them out to you. All right, if you can't take that, take it easy.